What's going on, guys? Welcome back to another video. So in this one, we're going to be going over everything that you guys need to know going into this next week's trading week. It is incredibly important with the data that we have coming up that you guys understand all of the implications of what this data coming out is actually going to do to the overall market. We saw a very significant reaction to some data points coming out on Friday, and we have a lot more going on over this next week. So again, guys, if you enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into it here and take a look at exactly what happened Friday, because, well, seeing what happened in the reaction to the data that came out on Friday is going to give us an indication of what we could look for when the data next week starts to come out. So we ended up getting the unemployment rate data, the average hourly earnings, and the non-farm payroll data on Friday at 8:30, and we ended up seeing this very, very significant reaction to the downside. Now, unemployment actually came in lower than expected, and you might be thinking to yourself, well, if unemployment's coming in a little bit lower than expected, isn't that good for the overall economy? Not necessarily right now, with more people in the workforce making more money, adding to that demand push pressure on inflation. So essentially what the Fed needs to do, which it really stinks that this is the situation that we're in, but unemployment actually needs to go up in order for this inflation problem to actually get better. Now, previously, a couple of days prior, we ended up getting the job openings data, and they actually came in on the side of basically people coming out and then saying, well, the Fed can actually start to think about a pivot. Now, if you had been watching anything that I had been saying after that data had come out, it makes absolutely no sense for the Fed to pivot their stance on policy right now. 0 cents. So we started to see the market come up. Some shorts started to be getting out of the market here. And then we started to see all of the Fed speakers starting to talk back up here. We got the data and we are back down to these key levels down here. Now, looking at this on the 4-hour time frame, we almost got that 4-hour cross up here, but not quite. We were still below the 200 EMA, so not really biased to any bullish positions. We are starting to see the MACD on the 4-hour starting to print and build that bearish momentum on the histogram here. We have the RSI below 50, and if we look at this on the daily time frame here too, we are right back down. The MACD looking like it wants to come down here too. RSI hunting its moving average, and again, as you can see here, we are really not that far from these previous lows. We're at 362 right now, and these previous lows that we were seeing were right around that 355, 356 area. So we really don't need that much more red in order to make new lows. So that's definitely something that you guys need to keep a lookout for. But again, as always, I want to give a quick shout out to all of our members that are absolutely crushing it in the market with all of the live streams, the learning curriculum. Again, learning how to actually do this for yourself in the market is incredibly important. We also have those algorithms, Pythagoras and Trader Joe, that are absolutely killing the market right now. If you guys do want to check out the best place to come and learn how to trade, make sure you guys check out that link down below. But moving on with the video here, remember, we were watching these target rate probabilities throughout this last week. They ended up going into from this about 60% range for that 75 basis point hike all the way up to now about 81.1%. Now, we're most likely going to get that 75 basis point hike in November. Remember, there's no Fed meeting in October, but thinking about where they need to take the federal funds rate right now, they're thinking about 450 basis points to 475 basis points. If you look at the current target rate, it's 300 to 325. So we have a long way to go in terms of getting rates to that terminal level where they're going to consider stop raising these interest rates. And everybody calling for a pivot essentially is looking at all of the cash on the sidelines and begging the Fed to come back in and give them a reason to put money back into the equity market. But what we see here is the dollar is starting to tick back up here as well, bouncing off that 200 EMA. When the dollar increases, your dollar is technically getting stronger. It's a deflationary effect. Now, you're also going to see potentially a decrease in asset prices because of that as well. But what we also see here is the bond yields on the U.S. Treasury bonds are actually coming up as well. So remember, we've talked about that concept of TINA. If we continue to see these Treasury yields start to go up, well, that is a place that these large money managers can start to put money because, well, it's a pretty much guaranteed rate and it's providing an alternative for what is out there right now in the potential returns in the stock market, which aren't looking too great right now. But getting into some of the data that we need to really focus in on going into next week. So on Wednesday, we're going to be getting the producer price index, which is essentially, as we can see here, the PPI program measures the average change over time in the selling prices received by domestic producers for their output. Now, the most important piece of data that's going to be coming out, well, we're going to have the FOMC minutes coming out on Wednesday at 2 p.m., but Thursday is going to be huge. We are going to be getting the consumer price index, the CPI. We're getting core CPI, which is excluding food and energy. We're going to get year over year, month over month, and we're also going to be getting another jobs report. So thinking about the data that we have here, if inflation does not show any signs of coming to the downside, the market is going to sell off and make new lows. If you start to see inflation coming out at, well, essentially what's expected by the overall market right now, then we could see somewhat of a positive reaction. You could see these people starting to call for a Fed pivot again. And if we end up seeing inflation come in lower than expectations, then you might see the market rally a little bit. But we also are going to have the jobs report. Again, jobless claims are essentially measuring the amount of people that are filing for unemployment benefits. If that number is lower, it means there's more people in the workforce too. So Thursday is going to be huge this week. So Monday, Tuesday, nothing too crazy. Wednesday, Thursday, really important in determining whether or not we are going to crack these new lows and really significantly sell off, or if we are going to kind of screw around at these lower levels again and potentially see some more chop and volatility. So guys, that is essentially going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend. I'll see you guys in the next one. Peace.